Joining us today on the Uncomfortable Podcast is Braden Pollock. Braden and I have known each other for almost 15 years. And I've been to my fair share of shows in my tenure, but I honestly cannot think of a single conference I've been at that he hasn't been. And after talking to him, I think he's been to probably over 50. And when he's there, he's usually found on stage, participating and helping others. And you know what? We need a lot more people like him. He's one of those people that when you look at him, you think to yourself, he was probably born as a CEO, wearing a suit, or as an investor. And you know what? I knew about his successful legal-related businesses, and also a lot about his other different investments in the domain industry. And also, let's not forget about having one of the world's best domain portfolios. But I never really knew his story, how he made his way, and his commitment to charity and helping others. And today you get to hear it. And with his success, Braden has moved on to become an avid investor. We get to hear what Braden looks for in a company, in a management team, what he likes to invest in, businesses he has invested in, wins, losses, and everything in between. So pull up a chair, this is a good one, and have a listen. And again, thanks for listening. We appreciate it. Today on the Uncomfortable Podcast, we have Braden Pollock. Braden is a well-known domain investor, angel investor, and serial entrepreneur. Among his companies is Legal Brand Marketing, which provides lead generation services to lawyers nationwide. As an angel investor, he has an equity interest in several dozen other companies, including Catalyst, Innovation Collective, iBeauty Brands, The Grooming Networks, which includes straightrazors.com, beard.com, classicshaving.com, and many others, as well as Bold Metrics, DataZoom, Tastry, Next Health, Osano, Stiku, and many others. He also is a domain investor as well and has thousands or tens of thousands of domains, and his focus is on premium oneword.coms. Braden's latest venture is the Pollock Fund, focused entirely on investments in alternative asset classes. We're certainly going to talk about that. And he also serves on several boards, including the nonprofit Internet Commerce Association, and I also saw another one called Benevolent. So he's also a staple at most industry events around the world. I was looking at your website. How many industry events do you think you've attended? I've seen a list on your website. It had to have been 100 at this point.
Yeah. I mean, we're talking about 18 years probably. And I go to all of them at this point. I probably go to 5 or 6 a year. And then if you add the ICANN events, even more. So
yeah, so I remember I met you in the Bahamas in 2012.
That's when
we were both shirtless. We were both shirtless on a catamaran. How do you like that?
And I believe we were holding hands as well, right?
We were, yeah. You do have nice hands, if I remember correctly. So, Braden, obviously I've known you from around many of the events in the industry, and many other people do as well. And from what I remember from talking to you, your story really starts with Legal Brand Marketing. But I'd like to hear a little bit before that and how you built that business up that you sold for a lot of money. And then we can get into some of your newer endeavors in the show and maybe talk some domains after.
Okay. Yeah. So Legal Brand Marketing, actually, I still have. And we just celebrated 20 years.
Wow.
Last month, I flew everybody out. We went to a retreat in San Diego and for 3 days, I think. It was actually pretty cool getting everybody together in one place. What I did sell, I think you're referring to Smart Start, which was
I'm sorry, my apologies.
Interlock business. I sold that, I don't know, some 6-8 years ago, something like that. So how did I get my start? So before those businesses, I've always been a serial entrepreneur. I always had projects. I mean, even in grade school, I was doing stuff, selling.
Where did you grow up?
Los Angeles.
In LA. And when you're in grade school, you were mowing lawns, or were you like selling shoes? What were you doing?
I was mowing lawns. I go to door to door, just like, hey, what have you done in the neighborhood? I'd bring literally eraser caps and jawbreakers to school and sell them to my friends. Why kids would want to buy an eraser cap, I have no idea, but I sold them.
Mm-hmm.
And then it turned into other things. I started a vending business when I was about 23 maybe.
So you graduated college, and then you thought you were going to do like candy machines and soda
I
machines,
started
things like
that. Yeah, that was after college. I didn't finish college. I went 3 years and then got bored. Uh,
that? Mm-hmm.
so I had this vending business, which is still around actually. I ran it for years, and then I gave it to my dad, and he ran it for a long time until he passed away. And then I took it back, cleaned it up a bit, and then gave it to my sister. And so my sister and her husband still run it to this day.
Oh, wow.
Yeah, almost 30 years
Okay.
later.
So would you go and empty the machines and the bags of quarters and the dollar bills and all those things?
I did
And
that
you,
until I hired someone to do it for me.
yeah,
Yeah.
got it.
Uh,
Wow.
that was probably my first like business that wasn't just a project. Because I had a lot of projects.
Yeah.
I did that for a while. And then I started a credit reporting agency and an immigration services business. I made pretty good money in the immigration business. Learned a lot from that. And at that point, I had a big staff. And then after 9/11, that kind of took a nosedive. And so I parlayed the office and the infrastructure and the staff that I had into this building a website for DUI lawyers. And that ultimately turned into legal brand marketing, which is all areas of law. Now we're actually starting to get into non-legal areas, lead gen. And then from legal brand marketing sprung the interlock business that I mentioned, and I printed a magazine. I had a book distribution business. I did a bunch of stuff.
So when you talk about interlocks, that is when someone gets a DUI or an OUI, when they're caught drinking and driving, and then when they go to start their car, they have to blow into the tube to start the car, right? And it's mandated by whatever judge when you get your DUI, that person has to pay for it, and they put it in the car, right?
Yeah, so it depends on the state. So either it's the court or it's the DMV that requires it. Different laws in different states. I had shops in 6 states. I had 200 stores, and then because I was already in the domain space at that point. I bought ignitioninterlock.com and interlock.com, interlocks.com, California interlock, you name it. I had several hundred domain names, and all pointing to various sites. I had 7 sites. I had one for each state, and then I had ignitioninterlock.com built out. And Ignition Interlock was kind of a general nationwide directory. So those leads would go to other providers. And then when I ultimately sold that company, I actually got more for the company because they wanted ignitioninterlock.com, because I tried not to include that site in the portfolio. I said, well, that's part of another company. And they said,
yeah,
no, that's included. And I said, well, no, it's not, because you're buying this company over here, and those domains are owned by another company. And they're like, we're not playing that game. They're okay. So I didn't have a choice. I had to sell it off, but it helped me sell the company.
So when the ignition interlock business, some poor person or somebody makes a mistake and drinks too much, gets caught, has to get that put in their car, and then they get found guilty and told they got to put it in there. Isn't it one of those things that the DMV's like, here are some vendors? Yeah. And I'm guessing like when you got into it, most people just paid the DMV to get on that list, or paid in some way to be on that approved.
No, because it's a massive undertaking to become a certified provider for that state. Some states is sole provider. I think Florida at the time was sole provider. There was only one approved provider.
Wow.
So there wasn't that many. There's maybe a half a dozen providers, and we were the biggest and most well known. And so so we're marketing to the lawyers, and we're marketing to directly to people who had gotten DUI. So we're doing all this marketing. Anybody that would recommend us. So we just wanted to be top of mind. Someone get a DUI, the next day they get mail from us.
Yeah, I got it. And that makes sense. I was thinking like, are you really going to shop around for one of those? Or are you just kind of stuck like going, just having to get one? It's like, okay, that guy's closest to my house. I'm stuck with it. I guess I got to go pay the guy the $1,000 or whatever to put it in. And
yeah, well, it was a monthly, it was a lease. So it's about between $75 and $100 a month. But we would market to judges directly, and judges were not supposed to tell the people what company to go with. They
Hmm.
just have to go get an ignition interlock, and the clerk will give you a list of providers. But sometimes the judge would say, "Go get a Smart Start," and that was because we had good technology and good reporting and stuff like that the judges wanted.
Okay. So how did that come across your desk that opportunity came along and you got yourself involved with this? Because it's a pretty obscure business. Same with really credit reporting. I mean, it's a part of life, but you just don't really think about, how big it is and just kind of stumbling into that. I know you said you were doing the DUI lawyer website, right?
Uh,
For somebody, and is that what got you into it?
um, that's what got me into it. Yeah, because I was writing content for the website early on, and I was reading about all this legislation that was coming from various states about ignition interlock, and I was writing about it, and I thought, well, this is probably a good industry to get into because all this legislation is being introduced to
Hmm.
require it. So after looking into it, one thing led to another, and I started doing it. So
Got it. And then you started doing it and it really took off. When did you say to yourself, I really have something good going on here?
um, I started in California and it was doing well, and then we expanded to Oregon, and then we expanded to the East Coast. And I just, we kept opening more and more shops as we saw demand. Um, so
And when you open a shop, are you calling like a mechanic and you're like, hey, try this out. You can make an extra X dollars a month on this guy and put it in
yeah,
and we'll give you a piece of the lease?
sometimes it was a lube and tune, sometimes it was a tint shop, sometimes it was our own corporate store. So it was kind of a variety. It just depended on the area and what the demand was.
Yeah. And then did you just show up to check on some of these locations and make sure they're doing what they're supposed to do? Or was it just kind of, we'll ship them to you and the money comes in and everybody's happy and, you get them back and they're broken or stuff like that? I mean, how does that work?
Um, I never checked on them. I had a whole team, right? So at that point there was a whole staff. Um,
Yeah.
we had a dedicated team just opening shops. So personally, I never went to a shop.
You never did. That's funny.
Yeah.
And you never had anyone like never answered the phone after you sent him a bunch of machines and like stole them from you or anything like that. I mean, I just feel like there's a lot of things that can go wrong in this business.
Um, yeah, I never. I don't know. I didn't do it. I had a president of that company. I never. So when I initially bought the license to do it, I hired somebody.
Mhm.
I hired a president of the company, and I was like, go build a team, and he
Uh-huh.
did. So he checked in with me a lot, but I wasn't involved in any of the day to day.
I got you. I understand.
For
So
I had that company for 11 years and never was involved in day to day. That's why I never went to. There was only one shop that I visited, and that was because it was in a building that I owned. So I'd go to that.
okay.
Yeah, that was it.
Okay. So then you were probably more or less working on the nationwide strategy of just trying to expand to as many stores as possible and trying to get it supplied to be able to do that, right?
I say that again.
Your daily work on that project or at that company was really looking at the bigger scheme of things and saying, how can we expand to 200 locations or 100 locations or 50 locations, step by
Well, yeah,
step, right?
the president of the company, that was his job.
Okay. Got it. So then what did you do from there? You sold that and what happened?
Nothing. I just went on with my life. I had a number of businesses. I had a law firm at the time. I had my marketing company. I had a domain portfolio. I had real estate. I was angel investing. I did a lot of things. And so when it sold, I don't want to say it was just another day because, I made a lot of money from that. It was a nice liquidity event. But I went on with my life. I didn't
Yeah.
actually do anything. I didn't buy anything. I didn't spend money. No, actually, that's not true. I bought a house that I was going to
You
fix
bought a house.
up. Yeah. But but it was a fixer. So I worked on that house for a few years and then sold it. But
Okay, so then legal brand marketing and Smart Start, the business, were two totally different
yeah,
entities. You sold that off, and then obviously you put more energy or focus on growing the lead business. You said you're expanding it now into
yeah.
different
I didn't.
areas.
I mean, when I sold it, I didn't put more energy in the lead business because um, I wasn't putting any energy into the interlock business.
Yeah.
So it wasn't really wasn't an issue. The last 20, almost 20 years, I've been involved in law firms. So
And were you involved in it as much as you were as the interlock business, or was that something you were involved in a lot more?
no,
It seems like lawyers
I was involved.
require more.
I was involved in that a lot more.
Yeah. And so now that, you've kind of cleared the law firm from your plate and this from your plate, what are you doing now? Like, what's a normal day for you? Because you're involved in 20 other companies.
Back then or now?
Well, back then, even now, like going to, it's like, kind of, it's pretty close in timing.
Well, no, this is year. I mean, I sold the law firm I got out of, I don't know, maybe 12 or 13 years ago. So that's been a while.
Oh, wow.
Yeah.
Okay.
So I got out of the law firm and I sold the interlock business maybe 8 years ago.
Okay.
And the domain business continued to grow. I continued to get more and more involved in domains and buy them. I at one point I had about 15,000 names because I was building out websites.
You're doing that with Rob Monster, right? For a period of time?
It was actually prior to Rob. It was with
Okay.
Luke Webster and Devrich, and Epic acquired Devrich, and then I was involved with Epic.
Okay. And then Luke also is, I'm guessing, because I've only met him in total passing, but I see him on Facebook and he always writes about his shaving business. And I'm guessing that's what led you to the beard.com and other shaving business with him, right?
Yeah. So I invested in that. So I'm 35%.
Okay.
It's a minority. So he runs it.
Mm-hmm.
And we've got that's a roll up. We purchased a bunch of related businesses, soap factory and competing websites and small manufacturers and that sort of thing.
And do you think that was a great investment? No. I would think that you're getting people on, like for me personally, I've been using the same razor for 10 years and buying the same shaving cream. Like I'm happy with it. I would think once I kind of pick, I don't really change. Probably pretty consistent business.
So they call that wet shaving, like safety razors and straight razors, as opposed to dry shaving, like shavers. And it was really hot for a while, beard oil and all that.
Yep.
And did well for a while, and trends change, and that one just went in a different direction. So a lot of companies that got big, the Harrys of the world and those
Dollar Shave Club that got huge and it sold for massive money.
Yeah, and then fizzled.
Yeah, I don't see the ads anymore, but that guy had that one funny ad everybody watched, and then it kind of died. So that's what made that company. But yeah.
Yeah, and Harry's and a lot of these companies they've sold out, but that industry has changed, and so unfortunately that affected us negatively. But it's still around. We're still selling. We still have a factory and still making stuff.
Mm-hmm. Okay,
but it's not fantastic. Certainly nothing compares to domains.
Yeah. And I mean, when you were building the sites, it was kind of like when Livestrong was big and there was a big traffic farms, and was it like eHow? I remember you were taking names and trying to make automated websites with content for people to do something other than parking.
Yeah, it was all. It was auto development. You're right. So these auto developed sites were great until they weren't. They're all ranking. They were doing fantastic. I sold some because people would type in whatever their term was, Tennessee ticket lawyer, whatever, and it would come up number one, right? And so I would sell them the domain and the site that cost me very little to put together, and it did great. And then one day, they're all gone from Google, and then I checked Yahoo, and they were still in Yahoo, and then one day they were gone from Yahoo.
Yeah, they're probably 6 months behind, right?
Yeah.
So do you think now with AI, if you had the same business plan and the same idea, do you think you could pull it off if you had the energy and the want to do it, to be able to have AI write all the content and everything?
Yeah.
And make
So we're doing it actually, and it does work. But if you just have ChatGPT write the article for you, then it creates conclusions and does stuff that makes it look like it's AI written, and you'll get hammered by Google. But if you go and you can pull out that stuff and tweak it a little bit so it doesn't look AI written, then it's fine. And Google is okay with AI written content, by the way. It's if you look, at their developer terms, they allow it. It just can't be shitty content like anything else.
Yeah, I mean, I've gone on it to see myself how good is it at telling you like what makes a domain valuable and ask like basic industry questions, and I think it does a pretty good job. I kind of find that ChatGPT is relatively long-winded in their answers. Get a little too excited about certain things, and I also look at it and say, okay, here's the article, but then you need to put in another like half an hour into it to optimize it and get it to where it needs to be. And sometimes by the end of it, you say to yourself, I could have just wrote this faster, because it does require a decent amount of work. But I'm guessing that you're training models to do much better than just me sitting here fiddling with it, over time.
Yeah. So you fiddle it with it for half an hour, but you can create automation to do.
Yeah. I've created my own little bot that I've put in a lot of different information about the industry. I've put in sales. I put in a lot of different data. So yeah, I mean, he's pretty good, but again, his answers are usually pretty long-winded. And then also when I try to use the data to maybe mine different parts of data and get things out, he always sometimes comes to the conclusion of telling me that he can do it, but he can't do it based on the rules of ChatGPT. Yeah. So it kind of gets frustrating after you spend all this time feeding it all these things, and then it doesn't give you what you want back in the end,
Well, build a better bot.
I know. I need to build a better bot, or I need to lie to it. That's what some of my friends say you need to do. You be a better liar,
right?
To it. So you are going to resurrect it. What was the name of the company a long time ago? What were you calling it? I remember when I was at CETO, you guys were doing it. What was it called?
The
when you guys were building the automated websites back.
It's called Deveridge.
That's what it was called. I thought it was called something else. I don't know why.
I don't think so. I mean, then it was acquired by Epic, and I don't know what Epic called it.
So and then that's how you ended up on the board of Epic because of that acquisition. Was that
no,
part of the deal?
Because he was doing a roll up, and I liked what he was building, and so I invested in the company.
Yeah,
I put a bunch of dough in that company, which is gone now.
Yeah, I mean, I've met Rob a few times. He's an eccentric person, but he's certainly a visionary and a very intelligent man. Yeah. And I could certainly see him, if he were to pull off all of those plans, he had a lot of the makings of something great, and I kind of look at that and look at Uniregistry in some ways that Frank kind of had a really good hand dealt to him as well, because he had the portfolio, he had the brokerage, he had the registrar, and he had the extensions and the back end registry. So he had the royal straight flush as well. And it was kind of sad to see it kind of get broken up and sold in different directions.
I was kind of surprised that happened too.
Yeah, but I think the thing is that there were times that I was like, I think we're going to pull this off. We had a CEO that was all in at doing it and was really excited about it. And I think some of the things didn't turn out the way that was planned. And I think that just like, stuff happens, market changes, things change in life, and it just doesn't go that way. And sometimes getting the money makes sense to kind of change your mind, as right? I mean, you might've had big plans for your company, and someone offers you the right amount of money and it's time to walk away.
Yeah. But those are part of my big plans.
They could have been part of Frank's too. I don't know.
Somebody offers me a lot of money and they can have it.
Yeah, no, that's true. Like, that's one thing that I'm realizing about you in this interview is you don't get too emotionally connected to any of your investments or any of the companies that you're running.
No,
is that
safe to say? Everything is for my house is not on the market, but you offer me enough money, I'm going to show you where to get dog food, take care of my dogs, and I'll never come back.
I hear you.
No, I love them.
So So we left off, we kind of bounced around a little bit in your life as an investor and in the industry a little bit. And now I'm looking at let's get closer to like today. And I'm looking at, 20 different companies or 10 different companies here, a bunch that I rattled off and others that, we don't need to talk about today. How many business cards do you have?
Oh,
Do you have a business card for every one of those companies? And what do you think about? I mean, if you have all these companies you're invested in, do you really know all these products? Have you tried them all? Do you understand them all? Like, do you get that into it?
so I have 0 business cards. Um, I have a handful of companies that I own outright. A handful of companies that I own a significant minority share. Not that's an oxymoron, but if you own 20-30% of a company, you're a little bit more involved usually. I'm a little.
Yep.
But then as an angel investor, I'm buying maybe 1% or 2%, and I'm not involved at all. And yeah, usually I've tried the product, I've played with it. It's oftentimes software, but that goes for even pre-investing in something, right? They're always going to send you a sample or give you access to the thing to play with it.
Yeah, of course.
So I've invested in roughly 40 companies. Some have exited, a couple have failed. So right now it's 30 some odd. Some are very small stakes and some are significant stakes. Some I'm on the board of, some I'm an advisor of. And then of course I've got my own company. So if it's a board meeting, I was in a board meeting yesterday for 3 hours. So there's the occasional board meetings. Every month, hopefully, I get an update from that company. So I read a lot of updates, and I read a lot of pitch decks from companies that are raising money. That's endless.
Yep.
So, and I honestly don't spend as much time looking for new companies to invest in. I'm typically doing follow-on rounds if the company's doing well. Because I have the right to maintain, it's called pro rata rights. It's something I ask for when I first get involved with the company. And pro rata rights simply means that I can continue to invest to maintain that equity percentage level. So,
okay, so they can't dilute you, or
well, I get diluted, and that's why I have to put in more money to maintain that.
Yeah.
So if let's say I own 1%, and because I put in, let's call it $100,000 when it was a $10 million valuation, but then there's a $20 million valuation. Well, I don't have 1% anymore unless I contribute more money. And let's just call it another 100,000. It's not, the math is not that simple, but let's call it another 100,000 to maintain that 1%.
Okay.
Right. Because the venture capitalist guys come around and they want to take the whole round sometimes. Right. But I have the right to put in no more than what'll keep my equity percentage position.
Got it.
So I'll typically do those. Maybe once or twice a year, I'll invest in a new company because of there's extenuating circumstances where it's a great deal and I have the opportunity to get in. But otherwise, I'm focused on running my companies and oneword.coms, which I'm actively buying.
Mm-hmm. When you invest in a company, so it sounds like you kind of get in a little later than most. I was going to talk to you about how you kind of put a valuation on that's fair.
No, I don't. I don't get in later. I get in very early. So I'm
get in very early. So what do you do to a person? Let's pretend I have an axe throwing business, and I want to open it up in different malls across America, and I have a whole business plan. It looks cool and exciting. You're like, this is something I can get behind. And I'm telling you, my projections are saying that in 3 years, we're going to be doing $10 million a year in profit. And you're like, I know real estate. That's probably not going to happen. That's a lot of axe throwing, but I think 3 would be a win. And like, how would you come to a reasonable valuation with these entrepreneurs? How do you do it?
It's funny that you asked that question because just this morning I was helping a company with their pitch deck, and they had this slide called financials and it was blank, and they said we want to put in projections, so we need help on how to put those together. And I said, as an investor, I normally don't give much weight to your projections when it's pre-product because it's just pie in the sky. Totally. And they're like, well, what do you mean? I said, well, what are you going to, you're just going to guess like you're going to have 2% market share, right? And do that math based on the total addressable market. And it's total nonsense. It's not based on anything. I said, well, what would be more substantial and be more meaningful to you? And I said, well, if you, first of all, you can't do it because you're pre-product. But if you had a product and you said, we're in, we've pitched this many people, we're in discussions with this many people, buyers, have asked for a demo. We're in contract with this many buyers. I said, that shows something, right? And then if you've had sales, we're in this many stores and this is the sales, and they've been growing over the last 12 months at this pace. So then you have something, you have a basis to make projections upon. But right now, you have no basis to make any kind of projections. You just make it up. I said, and you will always make it up in a way that's extremely favorable. Everybody thinks that they're going to do 100,000 this year, and in 2 years they're going to be doing like 25 million, and it just doesn't.
Yep.
It usually doesn't work that way, right?
No.
So I just don't give it a lot of credence.
And then in reality, in the plan to get there is never the plan in the end when you look back at it.
Well,
it just totally usually turns to dust in some way, not in a bad way necessarily. It's just you learn as you go, and things change and you learn.
Well, especially right? what I'm looking at, which is really early in the company life cycle, right? I'm looking at seed stage. And so a lot of it is guesswork. Now, if you're looking at an A round or a B round or a C round, so these rounds that are 8 years later, right? You're looking at a D round. The company's been around a long time. There's traction. There's product market fit. They have all of these things. They have historical data. And so they can say, this is where we are, and we see an opportunity here, and we need X number of dollars to hire this staff and do this marketing, run these campaigns, to launch this product, et cetera, et cetera. And that'll take us here, and this is our projection. But it's not pie in the sky because it's based on all these things they've been doing. Right?
Yeah.
But when you're getting in a seed round and it's like a brand new product or just an idea and it's pre-product, then I'm investing really in the founder. And what
and that's what I was going to ask next. Yeah. And then what do you look for in a founder and how much they're investing? I always feel like, that's really the first question is how much money have you put in yourself? What are you putting in this? Is this your only venture? Is this everything to you, or is this just a side thing for you?
Yeah, I mean, you do want it to be everything to them. You want them to be hungry. You want to have a co-founder, right? So if they burn out for whatever reason, they decide to go get married and move to Tahiti, anything could happen. You want a co-founder that can help. That's better because you don't really want to put all your eggs in one basket. You'd rather there's two people there. I'm looking for somebody that's gone through an accelerator. Because if it's just a dude that's got an idea, even if he's a good developer, then okay, but you can develop the thing, but do you know how to raise money? Do you know how to take it to market? Do you have resources? If you're not from that industry, what do you have? So I'm looking for somebody that has gone through an accelerator, that has training, and that has someone that can help them. If somebody has done a crowdfunding, for example, I don't invest in somebody that's crowdfunding. And the reason,
why not?
Because what they've done is they've raised $50, $25, $100 from hundreds of people, and they can't go back to that well for more money because that's not the model, right? Also, those people that invest that money can't help, right? So when you have angel investors have different skill sets and typically want to help, and they have resources and they help the company to push them forward and help them succeed. And then when the company needs more money, they can go back to that group, to the people that are on their cap table, go back to them for more money, right?
Yeah.
And so if your money came from crowdfunding, no resources, no further investment, nothing, that's done.
Got it.
So it's not a good way to raise money. I mean, if all they need is money and they don't need any resources, they don't need to go back, it's fine. But if they don't have real investors behind them and resources behind them, then that's not a company that I want to get involved in.
Got it. And then to twist it around on you, let's say that an entrepreneur has the hot product and you're like, wow, this is going to be something, like this is going to be really good, and you want to get in. What do you tell that entrepreneur what you bring to the table? I
explain to them what my resources are, because I do I try to be what's called smart money, right? So dumb money is just somebody writes a check. Smart money is somebody that can actually help. Oftentimes an advisor, because I get involved. I try to get involved with companies that I understand, products that I understand, so that I can be of service.
Mhm.
And so that's what we talk about, is what my resources are beyond just money, but how I can help them.
Yeah. One of the things I've learned working with some venture capital firms is that when they invest in a company, they have departments that provide resources, like anything from helping with email or recommend marketing companies or provide the marketing
Yeah,
themselves or do anything, legal advice, all kinds of different things to make sure that it's almost like a concierge service to help that company be successful.
for sure.
And I think
And that's what
people don't
but
realize.
that's what accelerators do, right? It's all
Yeah.
of those
Mhm.
things. And then when they bring in a VC is going to have all kinds of resources as well, including, oh, you need help with this particular small niche thing in your business. Call this CEO whose company does only that thing, and he's gonna walk you through it. Or let me put you on the phone with this founder who had the exact same issue a few years ago, and this is how he solved it. So it's those kinds of
Mhm.
resources, just putting people together, and that's something that I can do because I've been an investor for so long that if I've invested in 40 companies, like there's 40 founders I can reach out to, right? That
Yeah.
alone, and of course, there's more than that, right? I know other founders. I know people that have sold their companies and just, et cetera, VCs and people that do have knowledge in the startup world that can help. So it's not necessarily what I know; it's who I know as well.
Mhm. So when you invest in a company, when you're looking at it and you put your money in, your 100 grand or $1 million, whatever it is, in the back of your mind is every single one of them you saying to yourself, I'm going to get an exit of 10 times, 20 times out of this, 100 times out of this. Is that really the ultimate goal? Or when you invest in some of these smaller companies, like a 5 or 10 person company, they're probably not going to get a big exit, but maybe they'll pay you a good dividend every year for perpetuity or until they retire or something like that. Like,
No,
how do you look?
no, I've you can't just pay a dividend. Listen, if you're raising from an angel or raising venture capital, you have to sell because that's the only way to
How,
get our money back out. That is the path. It is you build this company and sell it. Either you sell it to the public, right? You go public, or you're selling it to some other company. But there has to be an exit so that I can get my money back. But
there's no other way.
if you open a restaurant and you just want to run this restaurant the rest of your life, I'm never going to invest in a restaurant.
Never.
Well, because I don't want a job, and I don't want a monthly distribution. That's not my goal. I want to
Mhm.
get a multiple on my investment. So take my money and in 7 to 10 years, sell your company for 100 times what I put in, and then we're good. Right?
Okay.
That's my goal, and that's most investors' goal.
And then
Sometimes it's
so
basic.
7 years.
Sometimes really it's like if they can get 2x or 3x, get out of the next round, they'll do that. It's different
Yeah.
models.
Or they're making enough money and they just say, we're going to keep it private and not exit. And here's your money back with a return. And you're like, fine, I'll take it. Or that doesn't usually happen.
Well, that's PE firms do that. PE firms will buy companies, right? And then
Yeah.
they try to get economy of scale by buying companies there's some what's the word? They put them together and they work well together.
A roll up or
They roll up and there's
merger.
and then there's economies of scale in putting them together.
Yep.
And so they'll do that, and then they'll take the distributions from that company for a while, and then because of the roll up and the economies of scale, then the company will trade for a higher multiple, and then they'll sell off that larger company that they pieced together, the roll up. Listen. There are investors that want to buy a bar and like get monthly distributions and go hang out at the bar, and it's a lifestyle investment. It's not what I want.
Yeah.
Right. I don't necessarily want to be that kind of involved. I want to be around for advice and to help. And sometimes as a crunch period, there's a company I got involved in that had a shitty investor that wanted out. They got out. Another investor came in who was terrible. I helped push that investor out. And he came in, he was lying about all kinds of stuff.
Great.
And then, like all the existing investors, make sure they were cool. And we found a new lead investor, and I worked every day on that business for a while. But I got compensated. I got what's called advisory shares. So I got more equity in that company for working. I didn't, obviously didn't take any cash. I put more cash in, as a matter of fact. And it was a rough patch, and it was kind of touch and go. And the company survived, and their last valuation was like $200 million, I think, just over 200 million. And I was in it an 8 million valuation. So that's
Wow.
So that's a pretty good. I mean, it's all on paper, right? And we'll see what happens. But I got a nice sized chunk of that company.
And that's a great position to be in, and these are the deals you dream of, right? And this is why you're doing it.
Yeah,
well, the other 10 or 5 that didn't work out, this one's the pearl, right? Or one of the better ones.
Yeah. I mean,
if it pays.
You're right, because right now it's just on paper. But if it's a 200 million valuation and some company comes along and buys them for $650 million, and I got it at 8 million, right? It's going to be a great payday for me.
Yeah, it's a windfall. Do you think you'll do something that day? You think you'll celebrate that one in more than buying a house?
Maybe on that one, it's possible. Yeah.
Yeah. I have a question I've asked some investors before, like you in the past. Would you ever invest in a competitor of a company that you've invested in?
I have invested in competitors. Yeah.
So you've invested on both sides of the aisle. And if you're sitting in the board, do you ever get involved in the board and you're on both sides, or more involved? Or is it more just like, this looks like a cool company, that looks like 2 car rental places that look like great business models?
I mean, I think there are synergies. That was the word I was trying to come up with a minute ago.
Okay.
There are synergies. I mean, look, I get involved with competitors and work with them because sometimes, first of all, you can't, no man's an island. We need to work together in the industry, and it's our benefit. So it's easier to work with than against a competitor. And whenever I've approached a competitor to work with them, and they don't want to have anything to do with me, I find those companies don't last, because there's a certain mindset to when you don't want to work with anybody else because you think you're better, and it doesn't work.
I agree.
With Legal Brand Marketing, we work with all of our competitors and always have. And some of those competitors I've ended up buying out. Some of those competitors have offered to buy my company. And I mean, it's like, why wouldn't, if you want to grow, why wouldn't you start by talking to your competitors? If you want to sell, why wouldn't you start by talking to your competitors? Right? And by having a relationship with them is better. I have employees that used to work for competitors that eventually left, and they want to keep doing what they're doing, and so they call me.
Yeah, and I do too. So I hear you.
Look at the domain.
Yeah, that makes
domain space. All the people that work in domain companies, they go from one to another, right? Nobody. This is like the Roach Motel. Once you're in, nobody leaves the domain space.
They don't. It's like the mafia. We don't leave. Have you ever invested in a company and you realize that the domain name that they're using is just dog shit? And have you told them, obviously that's your specialty and that you want to help them pick a new name or a better domain or an upgraded version of it? Have you ever had that conversation with the founder, and how was it received?
Almost every time.
Really?
Because I can't.
Okay. How does that conversation go?
Typically they already know who I am and what my background is, and so I can't think of a time where they haven't taken that comment or that conversation seriously. I think they've all listened to me. They don't necessarily want to spend the money, and sometimes I say, look, we're B2B, and this upgrade's not that significant. It's not worth the cost, and it's just the case sometimes. But you mentioned Catalyst is one of my investments, and they were Catalyst.fit or something. There were some alternative extension, and then along the way, I was able to. I saw Catalyst.co on auction. I picked it up for a few grand, and I was like, "Look what I got!" I was like, "Great, I'll take it." And he just reimbursed me, and And then the company was doing very, very well, and they had plenty of cash. And I said, it's time to go after catalyst.com. He's like, you think we can get it? I'm like, well, we're going to try. And I got it. Like everything has its price. I actually got a pretty good price on it.
Did you see a lift in the business after you got the .com? Do you think it mattered, or was it more of like a confidence play and a mystique play for them?
I mean, I think I'm sure it helped the traffic. I don't know. I mean, I never got involved with the metrics and the conversions on the traffic. I never asked. I mean, they were just so thrilled. The CEO was just beside himself, so thrilled that I was able to get it, because it had been years of, no, it's .fit, FIT, that kind of thing. Explain.
Yeah. Explaining yourself at a bar when you're trying to close a deal, how someone can email you or something, and you have to keep saying it is a bad thing.
There's another company I'm involved in that needs the upgrade, and I've been trying for years to get it. As a matter of fact, I followed up just this morning, coincidentally, and they just don't want to sell. But I've done a bunch of acquisitions for these companies I'm involved in, because I can, and I'm not going to charge for my services. I just do it because it helps.
Yeah, of course. Yeah, I mean, that's part of being part of the team, right? Yeah. That's one of the values that you bring. So let me ask you this: you invest in a company, they've raised a few $1 million, they have a prototype, they have a run rate, and then how much, if you're having the conversation about a catalyst.com with a K, and what would be, you would suggest to that company, like what percentage of that cash should they spend within reason on the domain? Like, what do you think it gets unreasonable, and what do you think is a fair amount that isn't reckless and that makes sense for the business?
I think up to 10% of the raise, I think, is reasonable. Beyond that, it really comes down to what's the company? Is it D2C, right? If it's D2C, you need a pretty strong name. Right, they're going to be out there on social media. Like, they need a good, memorable name that's not going to get screwed up with a dash or an alternative extension or multi-word, or whatever. So, I would recommend like pushing the budget for a very strong name on launch for something that's D2C. If they're only an Amazon seller, it's not quite as important. If they're B2B, they can be on an AI or an IO or some alternative extension, because especially in the tech space, right? If they're in a tech space, then you've got kind of a savvy client base. But if you don't have a tech savvy client base, then you just need to be on .com, right? I mean, .com is always going to be the best bet, but just depending on your market, you can go with something that's not quite as good potentially. But of course, it's going to raise the price of the .com, right? Or it'll get gobbled up by a company that's never going to sell it.
Yes, I mean, that happens. Or if you're at that stage, maybe you make a name change. I mean, that happens too, right?
Well, look,
you have to go do something.
My marketing company is Legal Brand Marketing, which I picked before I understood domains 20 years ago, and roughly. And I didn't. At one point, we talked about upgrading to lbm.com, which is, we always call it LBM because that's what everybody does. It's long 3 words, right? And you use that.
Yeah.
And our logo is LBM, and I could have bought lbm.com. It was brought to me a number of times, and I think it was brought to me with about $30,000, which today would be a good price. But then I was like, 30 or maybe it's $35,000. I thought, it's not going to improve business. It's just not, right? Because we're not out there getting people to remember our name necessarily. And I decided against it, even though I was steeped in the domain world at that point. I decided it wasn't worth money because I wasn't going to get any more money for my company when I sold it, which I haven't sold.
Yeah.
But whoever buys it is just going to roll it up into their larger company, and they're not going to care about the name.
Got it. What do you think are the traits that you look for when you say, I look at the management team when you make a decision? What are the traits that you look for in a CEO or co-founders? Like, what are certain very specific traits that you really pay attention to?
Well, they certainly have to understand the industry, right? They have to be knowledgeable.
Yeah.
I don't want. Well, I mean, look. There are myself included. Like, I will start a business where I'm like, here's a good idea. I'm gonna go hire some people to do this, and I'm not gonna do it myself. But I'm, stuff I have no business getting involved in. I get involved in, but I don't want somebody that just has like, I've got this idea to do this thing. I'm like, great, good luck to you, right? Like, why am I going to pay
Yeah.
you to try to execute on this idea, and you don't even have knowledge of that thing? Like, you just get now I have the idea. I could take my money and go launch that idea and own 100% of it. Why am I going to own 5% of it because you have the idea? Like, no, like, if you are in that world and you have this idea because you've discovered, a gap in the marketplace, and you have these resources and you could put these things together, that makes sense.
Okay. So, well, that makes sense. I agree with that.
So industry knowledge and hustle, right? Like, can they do it? If it's software, obviously I'm looking for somebody that's a developer as opposed to somebody that is, well, I have invested in people that are not developers, but they've been in that world, right? They've been the director of sales for the last 7 years at this company, and they have all the developers and have everybody lined up, and they know how to sell it, right? Because they've been doing it for a long time, and they're going to just build a better mousetrap and go sell it, and that's it. Right. So some sort of, I hate to use the word domain, but some sort of domain knowledge.
And then what about like just normal character traits of just somebody who doesn't give up and they're a hustler and they believe in the product, and that's really it?
Because, we're investing in founders. Right? There's lots of ideas. I mean, is there anything that's really that new? It happens, right? I mean, there's pharmaceuticals and there's new inventions, but most of the time it's not brand new. Usually it's a thing that already exists out in the world. And the question is, can this person do it better?
Yeah. And then do you actually want to meet them in person and like maybe go have some dinner and drinks with them? Or are you beyond that? You look at the paper, you might talk to them on a Zoom, listen to their presentation, ask some questions, and you're out the door with it?
Yeah, I mean, we're having a perfectly good conversation right now. We're not, in person. Right? Like, you don't need to be.
No, I agree. But no, I mean, but this isn't an interview for me to, for you to invest in saw.com. This is, or for me to invest in legal brand marketing, right?
No, it's just, look, if they're in LA, I'll meet them for coffee, and sometimes they're close by and they're like, hey, I'm going to be in LA in a couple of weeks. I'm not in rural Alabama. People come through LA. It's not that hard. So
course, yeah.
I will get together with people if they're making a trip out here, but usually not. Usually I'm reading the deck, I'm talking to the person, and they're in Montreal or they're wherever.
Yeah. Yeah, I got it. So let's change the subject a little bit and let's talk a little bit about domains. Unless there's anything else you want to add to what we were just talking about. Okay. How do you think the rest of this year is going to go with domain sales in general? Do you think it's going to remain relatively robust, or do you think we're going to go through a cold winter soon? What do you think is going to happen?
Things have definitely picked up this year. I had a decent year last year, and then after the 1st of January, inquiries started coming in. I've got I think 5 deals in negotiation right now. As a matter of fact, I think I might close one today or tomorrow. I might close 2 today or tomorrow. And I've had a good start to the year. Had some good sales this year. So when you see sales and you see inquiries pick up, the big names, the 6 and 7 figure names, as you well know, they take a while, oftentimes. And so a bunch of those conversations are happening. Some are already we're agreed at the price, and there's other terms that we're negotiating. So I'm not counting my chickens, but some of them look pretty good. The question is, are we going to continue seeing are rates going to continue to drop? The economy's okay. Credit is at all-time high, or debt rather. So that bubble is going to burst eventually, and then Will shit hit the fan? Probably to some degree it will. But domains have always kind of weathered that storm. And if the latter half of the year sales drop off because budgets tighten, it'll probably pick up again next year. I'm in this for the long haul. I don't need to sell a domain to eat tonight. So I'm fortunate enough to be able to buy and hold, and that's my strategy. If somebody comes along and offers me twice what I paid for a domain, that's ridiculous. The rest of the world would be like phenomenal. Imagine if you bought a house and somebody, I'll pay twice what you paid for your house. It's like you won the lottery. But in the domain world, like, you're not offering me 8, 10, 20 times what I paid. Forget it.
Yeah, but also you're also covering a lot of the other names you spent a lot of money on that you are never going to sell, and you thought were great and haven't gotten the nibbles that you've wanted to over the years.
Yeah,
right? So that's been kind of dead.
I dabble in all different areas of domain investing, but my primary focus, 90% of what I do is in oneword.coms, and to say I'll never sell them is a little bit different. I see those as the most liquid. They don't turn as fast, but it's not like there's only one buyer out there, right? So I've got iconic.com, for example, just picking oneword.com. Iconic.com is never going to go. It's obviously not going to go out of business, and it will always have value. And if I have not sold it in 10 years and I want the liquidity, I can wholesale it, and I can probably wholesale it for 2 or 3 times or 4 times what I paid for it. And if it's a year later, I could probably, after I bought it, I could probably sell it for 10 or 20% above what I paid, right? Just because it's been a year or two. So those are liquid because I can always sell them on the wholesale market. And so that's very different than a big portfolio of the average like $2,500 to $3,500 name. That, there's one buyer out there. You have enough of them, you'll sell enough to make money because you're getting 100x on them. But like you said, most of them or many of them will never sell. But this still pencils out. And my portfolio is different, much smaller portfolio, all of which have value, all of which I could sell. I'm turning down the offers that are twice what I paid because it's not enough, right? So that's
of
the
course.
difference. So mine's much
and an iconic
right than all the small name portfolios. Small name.
Yeah, and like an iconic.com, there is not just domain investors, but there's also people that are like you, who buy really cool names like that for hundreds of thousands of dollars. And they're like, I actually don't have an idea for it. I just thought the name was cool. And then like, I'm just going to put it over here for someday that I might need it, or a business that I invest in wants it. So I'm just going to keep it over there.
Yeah.
And they'll pay $200,000, which is amazing.
Yeah. And I've sold some names like that. Mark Cuban, everybody knows Mark Cuban.
It's wild.
He does that, right? He buys names and onto him. He's like, this is a great name. I'll maybe use it someday. Great. I'm happy to
absolutely.
sell those names to people.
I in our business, we saw the fourth quarter was a little bit on the slower side from what it was from years before. It seemed that a lot of people kind of went on vacation earlier for Christmas, because I always found myself like working on a deal on Christmas Eve, or, having to work on something on like the day or two after, trying to get it through before the end of the year. And it just wasn't that kind of action that a lot of the years in the past it had been. And I was a little concerned that going into the new year, that would carry over. And it didn't. And January did seem to be kind of a noticeable uptick in interest and offers and opportunities. And then January was a pretty good month. It wasn't one for the history books, but then this February has been pretty good. I mean, we've sold quite a few names, and we have a lot of things cooking and brewing. You're absolutely right. So that's good. I mean, I think talking to other people in the industry, they've said very similar things to you. And the other thing that I've noticed is, in times when I've been doing this since, 2010, and we've gone through times where it wasn't good in the economy, or war, or other things like pandemics, and yeah, things slow way down, but it always seemed like domains to me were robust. And they always have, when other areas of the market have really not done well, domains would go down, but then it would, for some reason, the the demand would come back up. Now, the VC funding is way down compared to 2-3 years ago. And I thought that was going to have a major effect on opportunities for us. And I felt like it kind of did. But now it's going. It's not like it was in 2020 and 2021, but it's still a lot more robust when I'm seeing that VC investment is down like 60% or 70% from the year before. That's alarming to me, and I don't know if Bitcoin's helping that. I don't think it is, because I'm not talking to a lot of people that are investing in Bitcoin or not investing, but investing in crypto related or blockchain related companies like I was a number of years ago. And I'm not talking to a lot of blockchain startups like I was that were looking to buy cool names either. So that doesn't seem to be propping up the market either, at least on my side of the business.
All right, so when crypto is up, domain sales are up. Because when it's up, I get offers in crypto. I have a 6-figure sale right now, pending, and we're $15,000 apart, so we're very, very close. And it's a crypto sale, and I've when crypto was up last year, same thing. I had crypto sales. These guys are sitting on a bunch of value in their crypto portfolio, and they want to diversify, and they understand digital assets. So that happens. As far as the VC funding, what's interesting is that funding might be down, but the VCs still have the money. So when the stock market goes down, people take their investment dollars out of the market and they put them in funds. So the VCs, they're sitting on a ton of dry powder, and it has to get deployed, because if they don't deploy it, they have to give it back. Well, they're not going to give it back because they want to earn their management fee, right? So if they give it back, they don't earn money, right? So it's counter to what they're doing. So what they do is they sit on it and they just hammer the founders for better deals. And so we saw a lot of VC funding dry up, but then it came around, right? Because the money was there.
I didn't know that.
And then it got deployed. When it got deployed, then it got deployed. Maybe these startups didn't get as much, or they got as much, but they didn't get the valuation that they wanted. That's usually what happened. It's just everybody took a haircut, and then they can use it for whatever they need it for. Sometimes domains and whatever else. It just was a little bit of a lag, which is why in Q4, myself included, I had one sale that was going to close at the end of the deal, and it got pushed, and it still hasn't happened. And another that did close right at the end of the deal, but I didn't get paid until after the first. But otherwise, it was a ghost town in Q4.
Yeah, it was slower. I mean, but I don't know if I'd call it a ghost town, but yeah, it definitely wasn't what it used to be. So yeah. So are you headed to Puerto Rico?
No. I'm going to Argentina for a wedding. That's a few days afterwards, and I was going to try to go to Puerto Rico first, and then Argentina, and it just it's too much.
That's a lot of traveling.
I've been traveling a lot. I've been to something like 9 countries in the last 6 months, and it's a lot. Plus a lot of domestic stuff.
Yeah, I'm sure. Did you go home and have you been staying at home since the ICA, or have you traveled other places since?
I'm trying to think. No, I think I've been home.
You've been home?
I think so.
Are you going to go to the Nordic Domain Days? I think that's like in May.
Yeah.
You're going to go to that?
Yeah, I'm supposed to speak. Yeah.
Are you? Do you think it's worth it? Do you think it's a good show?
I like the show. It's very like registry operator focused, and I talked to Lars last year about adding an investor track because there's plenty of people that would be happy to go to that conference, but when it's all registry stuff, like all of us don't care, right? So we don't go. But all he needs to do is add a few speakers, and then it'll bring the investor side. So we'll see if that happens.
I sent Rob Watson. I sent Rob Watson, who works for me last year. He went, and Dan Adamson, who I used to work with at Uniregistry, he was there as well. And they were there last year. I think they went the year before as well, and they thought it was a great, really good show on the domain side. But it was small, and I think that they didn't go to the ICA event, but the way they talked about it sounded similar to ICA, where there wasn't a ton of people, but the people there were of good quality and really focused on, serious about what they're doing, and
Absolutely.
it led to good conversations.
Absolutely. Yeah. It's just not investor focused, but there's no reason why it couldn't be.
Yeah. And then, if anyone's listened, I did a review of the ICA and I had a great show, and Braden is on the board of the ICA. And my question for you is, will the ICA is going to do the same show again in January next year, but are you going to add a second show, or is that something that is still being discussed or is not an option?
Still being discussed. I'm pushing for it. I would really like.
Yeah.
We'll see.
Do you think if they're going to do it, it would be in the U.S. or in Vegas or somewhere else?
No, it'll probably be in the U.S. I mean, I'm talking about East Coast, Miami, New York, something like that. Just to mix it up, and it'll be more expensive. It'll be a $1,200 or $1,500 ticket, that sort of thing. So it'll be a much smaller group.
Yeah, if you do Miami, it will. Yeah.
If it happens,
I always felt that, and I would go ahead.
If it happens, it's just a discussion.
Yeah, if it happens. Yeah, of course. I mean, we could talk about having one a week. It's just a discussion. But I mean, the way that I've always thought about it is that we have a community of people that are coming from Asia, obviously, and Europe, and everywhere else on the planet. And I would think about putting a map up and looking at how many direct flights are coming from the places that most of the domainers are from. And I'm guessing would be LA, Las Vegas, if you're doing the United States, LA, Las Vegas, Atlanta, and potentially like LaGuardia, or one of those like JFK or LaGuardia, or you look at Washington, D.C. I think like those 5, and maybe Chicago. Like those 6 places would probably be where you get the most direct flights or the easiest connection to a flight. And I would think that it would have the cheapest flights to get the most people there. But when you talk about, like, for example, Austin is hard to get to for a lot of people. Yep. It's challenging, right? Because there's not many direct flights. And so even if you're living in New Jersey or something, you still probably got to fly to Dallas or somewhere else and then connect or something like that. Yeah. So, and that's why, like, I went to the one, I think you were there a long time ago. I went to the conference in Valencia.
Yeah. And I was the MC and host for 7 years or something. Yeah.
And I love Dietmar. I thought he was such a nice guy. God rest his soul. What a wonderful man he was. And, I loved going to that show, but it was like so challenging for me to get there. It was just the overnight flight, and then you had to land, and you had to get a train, or you had to fly to Valencia. And it was just a really, it was tough to get to as an American,
Yeah. And I talked to Tim about that for years, but it was cheaper and easier for him because he lived there.
Well,
yeah, I mean,
the goal is to pack the seats,
And it is a beautiful place, but I said, look, I get it. It's easier and cheaper for you, but we've done it for years. Let's go somewhere else. And when did we go? We went to Madrid or some other place in Spain, I think. And then from there, what did we do? We went to The Hague, and we did a bunch of other cities. Right.
Yeah.
We bounced around, and I thought that was great. And then changed the name from Domaining Spain to Domaining Europe.
Yeah. Is that gone? Is that no longer? I don't even remember.
Yeah. So Rolf and I actually sat down with Soren and convinced him to buy it.
Okay.
And so it got rolled up into NamesCon.
Okay.
When GoDaddy owned it, and so. It was NamesCon Europe, and which is great for Dietmar because he had cancer at that point.
Yeah,
and so we did a deal, and NamesCon took over, but I think since COVID they haven't done anything.
Yeah, well, that was just a mess for everybody.
Yeah.
So. All right. Well, I think that's enough for today. We're over an hour, so I usually try to keep these at about an hour. And if somebody would like you to look at maybe a deck or invest in some of your, or potentially make an offer on some of your names, or just talk to you, what's the easiest way to get a hold of you?
Twitter. I'm on Twitter. I'm on all socials.
On all socials, Twitter. What's your handle on Twitter?
Braden Pollock.
There you go. That's an easy one.
Or Braden.eth.
Braden.eth.
Yeah.
And yeah, there you go. You have two. No, yeah, you've changed it. There you go. That's your.
Yeah.
Your
my email is Braden@legalbrandmarketing.com.
There you go. All right. Well, hey, thanks for your time. This is a great conversation. I really enjoyed it, and I hope people listening get a better understanding of what goes into investing in companies, what the expectations are of those people who do invest, and like that kind of point of view. Because I think a lot of people just think it's they look at it and they put the money in, and that the expectation is, I might get paid out or whatever, and they don't really necessarily understand the process and what really goes into this. And it's really a lot, and it takes a special person to keep up with it and to do it. So thanks for enlightening us on that and coming here.
About sell-through rate, right? I have a very good portfolio, and my sell-through rate is about 1.6%. So
yeah, and then with domains, it's about the same. Right?
Domains I'm talking about, and so
yeah,
so it and a good portfolio, we're looking at 2% sell-through rate. So if you buy 10 domains, right, it's going to take you years to sell one. And in angel investing, 70% of those businesses are going to go out of business entirely, and I lose all my money, right? And then some will get a little return, some will get my money back, some will make a little bit of a return on my investment, and maybe 1 in 100 will be 1,000x make up for all the others. So you kind of have to look at those percentages, know what you're getting into, because I see people that buy a domain name and they're like, oh, great, I'm going to sell this for like 5 times what I paid for it. Well, yeah, maybe, but it could take you 100 years to do that.
Yeah, and I think from like a domain broker's standpoint, a lot of the times when we work with somebody that owns one name, and it's even a really good one, and they expect to get $1 million, $2 million, you don't know how the market or the companies that you're going to approach in that industry are going to react to the name. Sometimes the moment you bring it to market, people are like, oh my God, it's finally for sale. We've wanted this name for 10 years. How much? And they like find a way. And, you have another company saying we want it or whatever. And other times you're pushing it and you sign that agreement and you think, all right, as a broker, there's going to be a line around the corner that wants this. And then it's crickets, and then sometimes those people that own the name are like, what the fuck? Why aren't I getting a ton of offers? Why isn't there?
Well, because the price is too high.
I don't know.
That's what it comes.
Yeah, right. It could be the price, or it's just just not interested. Like some industries are strange like that, and it's definitely
there are no bad names; they're just bad prices, right? So,
I see a lot of bad names.
Listen, it could be it's not worth $10 a year, right? I mean, that's possible too, right? But there is a price for everything, and so I have seen names where it's a fantastic name, but $2 million is just not worth it, right? But if it isn't $5,000, it would sell tomorrow.
Yeah, so you got to find that absolute max in the market and get it if you're willing to take that at that time, and that's it.
Yeah. All right.
Well, good. That's a great way to end it, and I appreciate it. Thank you.
Thanks for having me on.
All right.